Hey, welcome to Dallas Stock Talk, where I talk about topics relating to investing and finance. In this video, I'll be going over Tesla's 5-to-1 stock split. What is a stock split? Should I buy? Should I sell? What does this mean? Stay tuned. Now, before we get started, make sure you smash the like button because it helps the YouTube algorithm. It helps YouTube know that this is quality content and help my videos reach a broader audience. Okay, so we're going to go over Tesla's 5-to-1 stock split. So what does that mean? Am I getting more? Is Tesla becoming cheaper? Are they giving me a bargain? Well, this is the best example I can give to you. So say you have a pizza. The pizza is $15. In order to buy the pizza, you have to have $15. So if you don't have $15, you can't buy the pizza. So when Tesla's doing the 5-to-1 stock split, they're just dividing whatever their share price is into 5. So instead of having to pay $15 for the pizza, you can get a slice of a pizza for $3. So you're still getting the same amount. They're just letting you buy less. Or think about this. You have a Reese's. The Reese's is $1. So they're like, okay, I'll just sell one Reese's to you for 50 cents. So at the end of the day, you're still getting the same amount. And on the other token, a lot of times you can get fractional shares. So to me, I'm not super excited about it. Not unless you were a option trader, because there's a much lower entry point. So if you were an option trader, this could be really good for you. And in that case, it does matter. But since I don't really trade options, it's not that big of a deal for me. But at the same token, a lot of platforms do not offer fractional shares. So if you are a retail investor, especially maybe someone of a older generation, you may not be familiar with it. And this may be a great opportunity for you. But by the way, if you are looking for online platforms that allow you to buy and sell fractional shares, make sure you check the links down below. So now that I got that squared away, you know what the stock split is. Now I'm going to be going over more of the fundamentals of Tesla. So I'll be trying to give you the pros and the cons about Tesla. So as you know, right now, everyone's talking about Tesla. So it is very trendy. It's popular. So when things are getting popular, everyone, wants to buy it. So it's probably going to be compared to the fundamentals, what they considered overvalued based off of the company's current productivity. At the same token, just because the stock is overvalued doesn't necessarily mean it's not a good investment. But on me personally, my style is value investing. So we try to get great companies at a cheap price. However, Tesla, on the other hand, is a growth stock, high potential. They're taking much more risk because they're expecting higher returns in the future. So with that being said, investors are willing to pay way more for Tesla. Let's look at how Tesla's, and I'll have graphs and charts so you can actually see. Let's actually focus on Tesla's business. So from the revenue of, my number is going to be roughly, because I'm not actually looking at the charts yet, but roughly 60% of 2019, 60% of their revenue came from the Model 3. The other ones was 24%, I think it's Model X and Model Y. And then you have the 6% came from energies and roughly 10% from automobile services. So that's where the revenue is actually coming from for 2019. 2020 is probably slightly different. All right. So before, one of Tesla's critics would normally say about Tesla is, well, they haven't been profitable and they have a lot of debt. So those were the two things, and their ability to mass produce a lot of vehicles. So that is like the main thing of why a lot of people might not like Tesla. On the flip side, you have the people who are saying the upside. Tesla is not just they sell automobiles. Tesla is a tech company. They're thinking bigger than that. So that's if you were on the other side. And you would end up saying, if you were looking at it from a bullish perspective, in the last 4 quarters, Tesla's produced positive earnings. which means as of now, they're starting to be profitable. And I'll show you the charts and stuff a little later. Why is it them being profitable for 4 quarters a big deal? Well, I'll let you know why. Because the S&P 500, I don't know if you're a beginner, just stay with me now. Just think about this. The top 500 US companies that are profitable is in the S&P 500. So if you're new to investing, the S&P 500, a lot of times if you can passively invest in this index and get a pretty good return. And a lot of times you may outperform professionals over a longer period of time. Once again, it's the S&P 500. Me personally, I always compare my portfolio to this. Now, here's the thing. In order to be in the S&P 500, you have to have 4 positive quarters, meaning you have earnings. So now Tesla is now eligible to be in the S&P 500. Which, whether you like Tesla or not, now I would like to say in this part of the video, you have the speculating side and the investing side. So the more you hear me talk about events coming up or things that may happen, that's more on the speculative side. The more you hear me focus on the charts of the business itself, it's looking at it from more of an investor side. Some people can have both, but I just try to let my viewers know because I don't exactly know your experience level with that. Okay, so now Tesla is now eligible to get into the S&P 500. A lot of retirement funds and all that stuff buy this index. A lot of people passively buy it. So, and now because Tesla market cap, it's super popular now, their market cap is the 12th highest as far as market cap as all US companies. So they're like, right now they're sitting slightly below Walmart. They're sitting lower than Procter & Gamble. So the thing about it, if they do make it based off the board, if the board end up putting them in there, they go by the market cap. So the companies who has the largest market cap, it'll be more in the S&P 500 because it's weighted by market cap. So because Tesla's market cap is so high, 1% of the S&P would be Tesla. So whether you like it or not, let's look at some of Tesla's fundamentals. Okay, so we're looking at Tesla. As of August 12, 7:59, it closed $1,554.76, up 13%, a little over 13% for the day. Now I mentioned earlier the fundamentals and the finance. So let's check out Yahoo Finance so you can see what I'm saying. So Yahoo Finance, these 3: income statement, balance sheet, cash flow. From a fundamental perspective, these documents are weighed heavily. So for income, remember I said Tesla before they wasn't profitable. So if you look at the annual 2006, by the way, the green is revenue, the blue is earnings. To me, for most people, earnings is what matters. Okay, so as you can see for 2016, 2017, 2018, 2019, not profitable, like I said. But on the other token, if you look at the past 4 quarters, once again, the blue is earnings, the green is revenue. So you can see it has been making some money, decent. Well, it has been making some money. It is considered profitable. A company can make some type of profit. It's good to see. Sorry. So here's another one. This was Simple Wall Street. I like this site because it kind of gets you a whole bunch of important information in a snapshot, so I can really see whether I want to dive into it a little bit more. From a value perspective, this is kind of based off of their earnings. Of course, since Tesla's a growth stock, it's going to be way overvalued. Now, this was actually done when the share price was $1,374. Now it's $1,500, so this is probably going to go way over here. So because it's the hype, hey, when stuff is popular, you're going to pay a premium. So from a value perspective, the fair price is $642 based off of estimates. But like we said, just because the stock is overvalued doesn't mean it's not a good investment. All right. So the light blue is revenue,
the green is earnings. As you can see before it, and this started at 2008, it wasn't profitable. And right around there, end of 2019, if we seen, you see the green, you see the green line passes that line, the white line, so it was profitable. Now, if you also, this is, I just want to throw out the free cash flow. Don't focus on it too much, but just know whenever you see a positive cash flow, that's really good. So when you're looking at the financial position, the fact that they have more assets than liabilities is a great thing. So it should let them know that they're in good financial standings because they can pay off short-term and long-term debt, which is good. Now the debt thing, this was the concern before. So as you could see in 2017, 2018, 2019, the debt to equity ratio was really high, like really high. But as you can see, as the equity end up, getting some momentum, the equity goes up and also the cash goes up. So yeah, the debt is still high, but the amount of equity and cash also went up significantly, which would be a good thing. However, the debt is still high. But here's the thing that I kind of like about this site. It lets you know, and the debt was reduced from 300, and the debt to equity ratio was reduced from 366.3% to 112% over the past 5 years. So looking forward, that's definitely good to see. But as you can still see, they still have a lot of debt. But I just wanted to show you those few things really quickly, so you can kind of see some things that I look at when I'm looking at Tesla.
And that concludes this video. If you haven't already, make sure you smash that like button. And if you're new to my channel, make sure you subscribe. And if, by the way, you want me to discuss a type of company, make sure you drop it in the comments below and I'll be sure to do it. And I'll catch you guys later.